What if I told you the world, as we know it, is undergoing a major shift in financial power? The global dominance of the US dollar, something we've long taken for granted, is now facing an unexpected challenger, the Chinese Yuan. Over the past few years, we've seen a dramatic turn of events that would have seemed unthinkable just a decade ago. Today, the Chinese Yuan is not just a participant in global trade, it's becoming a leader, a currency that countries are increasingly choosing for their transactions, leaving the US dollar in its wake. But how did we get here? What does this mean for the future of global trade and the economy as a whole? The yuan takes the lead in global trade. Let's start by looking at the facts. Recently, we discovered that the Chinese yuan has surpassed the US dollar in trading volume by 2.5%. For context, this means that countries are now using the yuan more frequently than the dollar for cross-border transactions. This milestone marks a critical turning point. Just imagine, 5 years ago, in 2019, the yuan only accounted for a small fraction of global trade. Fast forward to today, and it's becoming a preferred currency for international commerce. This shift is largely driven by the BRICS countries: Brazil, Russia, India, China, and South Africa. Originally established to foster cooperation among some of the world's most significant emerging markets, BRICS is now spearheading a movement that threatens the very foundation of dollar dominance. This change isn't just about numbers, it's about power, control, and who gets to set the rules in the global economic game. China and Russia's strategic play. China and Russia, the two most influential BRICS members, are at the forefront of this shift. Their goal is clear: to reduce dependence on the US dollar and promote the yuan as the global currency of choice. This strategy has been carefully crafted over the years and is now playing out on the world stage. But why are they doing this? Consider what happened in February 2022, when the United States imposed severe economic sanctions on Russia following the invasion of Ukraine. These sanctions effectively cut off Russia from the global financial system, which is heavily reliant on the US dollar. Faced with these sanctions, Russia turned to the yuan as a lifeline, starting to accept it for payments across all sectors. This move had a cascading effect. Other BRICS members, such as India and Brazil, followed suit, opting to use the yuan for their trades, particularly in commodities like crude oil. India, for example, saved an estimated $7 billion in currency conversion costs by purchasing oil at a discounted rate using the yuan rather than the dollar. That's a significant saving that any country would find hard to ignore. A ripple effect across the global south. The impact of this shift extends far beyond BRICS nations. Countries across the global south are increasingly looking to the yuan as a way to bypass the traditional dollar-dominated financial system. Why? Because the yuan offers them an alternative, a way to conduct trade and manage economic affairs without being at the mercy of US sanctions or dollar-driven economic policies. Take a look at Brazil and Argentina, two of South America's largest economies. Both countries have started to settle their trade deals with China in yuan, reducing their dependence on the US dollar. Even in the Middle East, nations like Iraq and Saudi Arabia are contemplating using the yuan for oil transactions with China. The writing on the wall is clear. The world is diversifying its currency basket, and the yuan is emerging as a favorite. The data speaks. Numbers don't lie, and the data around the yuan's growth is compelling. According to SWIFT, the Society for Worldwide Interbank Financial Telecommunication, the yuan reached an all-time high in its use for foreign trade transactions in July 2024. Its share of global transactions climbed to 4.74%, up from 4.61% in June. To give you a sense of the rapid change, this was the 6th consecutive month where the yuan's share stayed above 4%. It's not just about a higher percentage. The value of yuan transactions jumped by 13.4% compared to June, far exceeding the 10.3% growth reported for all currencies combined. Standard Chartered's Renminbi Globalization Index, which tracks the yuan's global use, also showed a continued rise this year after 33% growth in 2023. Compare this to 2010, when the yuan was practically insignificant in global settlements, accounting for less than 0.1%. Today, it's the fourth most traded currency globally, and in trade finance, it even surpassed the euro, with a market share of 6% compared to the euro's 5.8%. Why are countries choosing the yuan? So why are nations flocking to the yuan? One of the main reasons is geopolitical tension. Many countries in the global south want to reduce their reliance on the US dollar. This is particularly important for countries that have experienced the brunt of US sanctions or those who fear future sanctions. Moreover, China is the world's largest exporter, and it makes sense for its trading partners to use the yuan. In March 2024, the Chinese yuan overtook the US dollar as the most utilized currency for cross-border transactions in China. Data from the State Administration of Foreign Exchange revealed that cross-border yuan transfers reached a record $549.99 billion in March alone. The yuan made up 48.4% of all cross-border transactions, while the dollar's share dropped to 46.7%. By May 2024, the yuan's share had risen further to 53%, while the dollar's share had fallen to 43%. This trend is hard to ignore. China's financial diplomacy. But what is China doing to make the yuan a truly global currency? It's not just relying on market forces. The Chinese government has taken several strategic steps to boost the yuan's appeal. They have integrated China's domestic stock and bond markets with Hong Kong, making it easier for foreign investors to buy Chinese assets. As of May 2024, foreign investors held 4.2 trillion yuan in mainland Chinese debt instruments, up 32% from the previous year. China has also made it easier to issue so-called panda bonds, yuan-denominated bonds issued by foreign companies in mainland China. Between January and May 2024, panda bonds worth approximately $11 billion were issued, increasing the total amount of panda bonds to around 240 billion yuan. Capital restrictions have also been loosened, allowing more flexibility for foreign investors to repatriate funds. The appeal of panda bonds lies in their affordability. Nominal interest rates in China are significantly lower than in the US, making these bonds an attractive option for investors. The impact on global trade and finance. So, what does all this mean for global trade and finance? The shift towards the yuan is more than just a trend. It's a fundamental change in the global economic landscape. As more countries opt for the yuan over the dollar, we're witnessing a gradual erosion of the US dollar's dominance. In practical terms, this means that countries like Brazil, India, and Russia are now more financially independent and less exposed to the whims of US economic policy. It also means that for many developing nations, there's now an alternative to the US-dominated financial system, one that doesn't involve the same level of scrutiny or control. But is this shift sustainable? Can the yuan truly replace the dollar as the world's leading currency? While it's too early to answer definitively, the data suggests a trajectory that could challenge the status quo. What's next for the global economy? Looking ahead, several questions remain. How long will it take for every country in the world to embrace the yuan instead of the dollar for trade? Will the dollar continue to lose ground, or could we see a resurgence? And how will this impact the average person? For instance, if the dollar declines, what happens to its value? And what does that mean for inflation, purchasing power, and everyday expenses? These are not just theoretical questions, they are practical ones that could affect us all. If you're someone who is investing in foreign markets, trading commodities, or even just holding onto a savings account in US dollars, these shifts could have real consequences. Could crypto follow? As the Chinese yuan rises, another question emerges. Could cryptocurrencies be next in line to challenge the dominance of traditional fiat currencies like the US dollar? Just as the yuan offers an alternative for countries seeking financial independence, cryptocurrencies present a decentralized option that bypasses central banks altogether. We've already seen nations like El Salvador adopt Bitcoin as legal tender, and several others are exploring the potential of digital currencies. With the growing popularity of blockchain technology and digital payments, it's not a far stretch to imagine cryptocurrencies gaining a foothold in international trade. Think about it. If countries are willing to move away from the US dollar to avoid sanctions or reduce reliance on a single currency, what's stopping them from considering Bitcoin, Ethereum, or other digital assets? Cryptocurrencies are borderless, resistant to inflation, and not subject to geopolitical tensions in the same way traditional currencies are. Could this shift towards the yuan be the beginning of a broader move towards decentralized financial systems? What's your take on this? Could we see a future where nations transact in Bitcoin or other cryptocurrencies? The yuan's future. The rise of the Chinese yuan is undeniable. It's growing increasingly attractive to countries looking to sidestep sanctions and maintain financial independence. The question isn't whether the yuan will continue to rise, but rather how quickly and to what extent it will reshape the global financial landscape. So, what do you think? Is de-dollarization moving at a rapid pace? Is the dollar's decline imminent? Share your thoughts on the US dollar's value and global issues in the comments below. And if you'd like to see more videos like this one, don't forget to like, subscribe, and hit that bell icon.